let's go to the euro dollar. So like I said earlier this morning, what I did is I took my lines and I removed them. Okay. So first and foremost, here's the euro. As far as we basically went mid-range, 50% retracement. We didn't get to where I was really hoping that the euro dollar would hit 106.80. As you guys know, I was pretty adamant about buying it down here. I was actually going to buy the euro down here. I've been hoping that we dip down to the 618 retracement, the breakout point. I was really hoping, because you can see that's where that squeeze started, 106.80. It's a big level, and I was really hoping we'd make it down there so I could buy the euro. Obviously, that didn't happen. All right, so let me get rid of this trend line. I don't think that's relevant at the moment. So that didn't happen. We, broke through 108, which was our resistance from yesterday. This previous support, current resistance. So we broke that yesterday. That's going to be support today, okay, which is going to be 108, just so you all know. Okay, so let's go write that down, 1.08. And I know it's really close, but I really don't think we're going to dip much below 108 today. Now, I may be wrong. I mean, with the Aussie dollar looking the way it's looking, and with stocks, getting close, within 20 points of pretty major support. I mean, we could theoretically start breaking down, but I would say that now resistance is going to be up here at 109. So we're just doing round number figures up and down. So if we get to rally to 109, I'm going to be a seller today if we can get up there. Okay. We're still in a range environment. Okay, range environment. Nick says they usually have a number of guests and time they give you is accurate. I have done the show. Hey, Nick. Nick Trades is here. Hey, Nick. I hope your ear. I heard something happen with your ear. Now, usually I tell my kids this, Nick. Don't stick your fingers in your ear, because if you stick your fingers in your ears, what can happen? And so apparently you've been running around with your fingers stuck in your ear. I hope not. So no, I'm poking fun where I shouldn't be poking fun. I hope you're actually feeling better. There's nothing worse than having where you can't hear, or you can't, I've had an ear infection where I can't hear for 3 days, or ears clogged up. There's nothing worse than that, because it feels like something's seriously off kilter when that happens. So I hope you get better soon. Don't answer the phone when cleaning your ear with an earbud. Oh no. Oh man, that stinks. All right. Well, I hope you can get better soon, because like I said, there's nothing worse than when something happens to your ear, because what it does is to me, I know when it's happened to me, it just makes me where I can't concentrate. I can't concentrate at all. So, man. Okay. Anyway, good to have you here. There's the euro. Let's go over to the cable. So the pound, somebody asked me to look at the pound earlier. I forget who exactly was asking me, but the cable is all over the map. What happened here? We were just trading down there. By the way, I got asked a little bit earlier this morning if I'm still short the euro pound. I got out of my euro pound yesterday. If you were on the Lunch Money webinar, I took 22 pips off the table. And I was thinking, well, if the euro pound gets closer to 74 pence, I'm going to short it up there if I can. But anyway, the cable, I don't know why it just ripped up. It's interesting. Look at that. Hella bounce. Maybe a lot of that is coming through with the pound Aussie, because I think the pound Aussie is getting destroyed right now. Oh yes, it is. That's a breakout. So I think the pound is probably just feeling some cross rate effect right at this very moment in time. I think that's what it is. So anyway, let's go back to the pound dollar. So the pound dollar Now, the PMI data that came out overnight was a little worse than expected, the construction PMIs. So that is what originally put the downside pressure on the cable. But I think we've got to watch this range, as you guys know, was our range yesterday, still our range today. So a breakout above 148.70 would be pretty bullish there. Look at the Canadian. And that Canadian's bouncing back due to crude oil falling. We'll get to the Canadian here in a minute, but 148.70. I think that was our resistance yesterday, right? 148.70. That would be key to get the cable back in the upper end of its range, right? Squeeze back up here towards 150. Support is at the 786 retracement. Same as we wrote down yesterday, 147.50. Okay, let's go take a look at the Swissy. So the Euro Swiss, Thiago just brought it to my attention. Yeah, we're at 104. I mean, the Euro Swiss is getting destroyed. The dollar Swiss is obviously just kind of sitting there. And most of you guys know this. I have a long dollar Swiss and I have a short dollar yen. They're hedged, which is frustrating because neither one of them are really moving. Well, they're both moving down together. But we're approaching a 618 here, and so this comes in at basically 95.90. I'm going to write down two levels of support here. 95.90 and 95.50, which will be the 786 or close to spike lows over here. So let's write those two down. 95.90 point, or 95.50, excuse me. 95.90, okay. And then resistance. So if we bounce from these levels, you know, any rally now to 96.40 is going to find sellers, no doubt about it. So, you know, if we bounce for current levels, 96.40 is going to should cap rallies. You notice, I want to bring up something really important about the Aussie dollar right now. Do you guys see what the euro is doing right now? Do you guys see what the euro is doing right now? It's holding up, right? What's the cable doing? Bouncing back. What's the Aussie doing? You can't get its head off the floor. Do you see that? It's just hovering near its lows. If the dollar decides it wants to bounce, you know, because you can see this little pullback that we've got in the dollar at the moment. If the dollar decides to bounce, that Aussie's going to get destroyed. It's absolutely going to get destroyed because it's not bouncing with the cable. It's not bouncing with the euro. So, and same thing with the Canadian. You know, the dollar Canadian will wicked bounce back to 127 too. If the dollar starts to bounce from here, keep an eye on these commodity currencies. These commodity currencies are really out of favor right now. And notice, you know, with gold as strong as it isn't even helping the Aussie. Just something to keep in mind. All right, let's go over to the yen. So the dollar yen is hovering right above support right now. As you guys know, big support here, right? Yesterday, support we wrote down at 94 or 119.40, right? 119.40, 119.40, we're just holding it. The low is 1944. I was off by 4 pips yesterday, so, or maybe off by 2 pips. I don't know where the morning edge was when we did it. So anyway, really, really critical support. Resistance is a falling trend line. Now is at the, you know, 618, because now that comes in at one. It's been a falling trend line for the last several days that we've been drawing it or writing it out. So we've just been, I think 2 days ago, if I'm not mistaken, you guys have all the data in front of you. I don't. We had resistance at 120.50 and 120.25. Today it's at 120.15, right? Something like that. 120.15. We are still in the range. Canadian. So here's the dollar Canadian. We broke through 126 support yesterday. We went as low as 125.75, enough to stop everybody out. 50% retracement basically is contained prices for the most part, and now we're bouncing. So let me delete a few things really quick because I drew that out yesterday. Okay, which obviously we bounced from there. The Canadians, like a lot like the cable. Canadians pretty notorious for going past support and resistance enough to stop people out and then reversing. But generally, it's maintaining a nice, pretty easy um, direction. But now I want to show you something that a friend of mine sent me this morning. You guys want to see something interesting? Here, I'm gonna go. I'm gonna. Oh, here it is. I got it. Never mind. I can't wait for you guys to see this. This is via the Wall Street Journal. All right, folks. Here is where forecasters think oil is heading. Okay. Here's where crude oil is. These are all the banks. Okay. Look at the most bearish bank. Merrill Lynch. What's in common with every bank that you see there? What's in common with pretty much every bank that you see there? This is regarding crude oil. What's common? Oh, they're all bullish. From current levels, they're all bullish. We're stabilizing here and we're going higher. Now remember, these are analysts that don't trade and they don't understand price action. Make of it what you will. But they're the same people, that when we were at 95, they said that we're going back to 125. And they're the same analysts that probably have not been shit canned this morning or the last 6 months, that when we were at 95 did not forecast that we were going down to the 40s, that had to adjust their forecast. And they still get paid, which is the craziest thing in the world. I want that job. Why don't I get that job? How come I've got this crappy job here? I don't know why this happens. And this is just, it's so unfair. I don't get it. Oh, man. Anyway, I think that the most classic thing is when Yahoo Finance posted that thing from me when Dan Dickery, he said, "Here comes the crude oil super spike." We were at 98. And I said, no, crude oil is going down. It was in Yahoo Finance. And like literally 3 weeks later, crude oil fell like, 40 bucks. Anyway, that was classic. I have to admit, that was great. Anyway, and I don't, I usually don't pat myself on the back, but that one was really good. Super spike, super spike. The thing is I actually believe crude oil is going higher at some point. Once we hit 30, we're probably going to go back to 80, but, anyway, I think it's structurally broken. I think crude oil is broken. You guys, those of you that are longtime listeners know my outlook on crude. It's broken. Technology advancements have really broken crude. It's broken its back. Anyway, all right, so here is the US dollar Canadian. We're in a flag pattern, and what we're threatening right now is a breakout. So let's be a little bit more specific about this analysis that we've got going on here, because I screwed that up a little bit. It's going to look something like this. Okay. All right. So now support the dollar Canadian. I mean, any dip now to 126, you're going to find buyers. There's no doubt about it. Because you see this? Oops. You see that? Buyers are going to be lurking now down here. Okay. Yes, we are still in a range. Yes, that's a bull flag, but don't misunderstand my bull flag for we're in a bull flag inside of a big range. Okay. We're in a big range. We have to take out 128 to really get this thing moving. Which, I mean, theoretically could happen. I mean, if this flag plays out, like let's say this flag is really a play, shoot. Okay, there we go. This flag decides it wants to play out. I mean, it's pointed to 129.50. We have a lot of work to get there. A lot of work to get there. But, we're trying to flag right now. Okay. Like I said, any dips to 126 are going to be bought. Resistance is going to be at 127 and change. So like 127.10. Remember, we got trade bounce out of Canada today as well. That could obviously influence prices. All right, boys and girls, ladies and gentlemen, ladies and germs. I'm going to put you on break for just a couple minutes, and when I come back, we will finish up with the Aussie, the Kiwi, and the dollar index. Don't go anywhere. Thank you all for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm going to welcome you all. Happy Thursday, everyone. Hope everybody's having a great trading session. Raphael makes a great point. He goes, he said, and the specs, notice how crude specs never went short all the way down when crude lost 60% of its value. It's a great point. Great point. And I totally forgot about that point from way back from a couple months ago. That's a great point. Isn't that wild? No one ever, because everybody thought that crude would stop. Everybody thought crude would, Anyway, crazy stuff. Okay, let's get through the Aussie and the Kiwi really quick. So here is the Kiwi, still capped by 75 cents. Support still here at the 618 at 70. Can you guys see my charts? Randall said, "Can you see my charts?" Oh yeah, okay, very good, thank you. All right, Randall said share my chart, so I was figuring you guys might not be seeing it. Okay, good. All right, so here is the, oops, shoot, where do I go? Here's support in the Kiwi. Same support, 73.80, okay, 618, 75 cents, still same difference, nothing's changed here. 0.7380, resistance 0.7500. Hold on really quick, stand by. Okay, sorry about that. We are in a range. I hate being in a range environment. I hate it. You guys know this. I'm I'm somebody who loves to be extremely biased in the market. I love to have a bias. I love to be decisive. Like I'm extremely like right now. I'm pretty bearish the Aussie. Obviously, I mean I've got some Aussie shorts going, but the Aussie looks pretty bearish. I mean if I had a bias chart and it was for the Aussie and it wasn't dollar related and it was all Aussie related, it'd be very bearish the Aussie dollar right now. But that really is the only currency at the moment that seems very directional. When you're talking about dollar pairs, we're in a lot of channeling moves. So, do you guys remember the out of all of the dollar pairs on the bias chart this week, which is the only one that's had any directional bias? The Aussie, right? All week, everything else has been range, but we've had a bearish bias on the Aussie all week long, right? And here we are today. The Aussie is the only one that continues to break lower. So, hopefully that, helps you, understand how we do analysis here. Um, the Aussie's just been, clearly showing us that it's weak. So where do we go from here? I mean, that's the question. My assumption is we're going to break down. I'm short, but I haven't added, and I'm not going to add until later today. If we end the day down here at 45.20 or something, I'll probably add. But the question is, where are we going to go? And my 2 cents has been that we're going to 71 cents. There's a triple confluence down there. It's a 127% extension of this move from 2010 to mid 2011. From the 2008 post financial crisis move, we have a 786, from the 2008 to 2011 move. That's a 786. Also, if you go in the way back of the multi-year move from 2000 to 2011, there's a 618 that resides right there as well. So, I'm looking for 71 cents or so. And I'm not even, guys, just because I'm targeting that area doesn't mean that when we get down there, I'm going to buy it. Just like, in 2012 or 11, when we were up here at 208, and I said, okay, I'm targeting 80 cents. Back when we were up here and I told you I'm targeting 80 cents, when we got to 80 cents 2 months ago or 4 months ago or whatever it was, I told you when we got there, I've been wanting to buy it at 80 cents forever. We finally got there and I'm like, man, I don't think I'm going to buy it. The situation, didn't justify me buying it once we got to 79.50 where I originally wanted to buy it. I was like, price action looks pretty bearish and the dollar looks too strong. Not going to do it. So just because we get to 71 cents doesn't mean that's where I'm going to buy it. I'm just targeting that for now. Okay. If we're if the stock market's in the middle of a 15% correction and we look like we're going to blow through 70 cents, I'm not going to sit there and stick my hand out and buy, stick anything out and buy the Aussie dollar. I'm just not going to do it. That's where I think we're going right now. But theoretically, we can go back to 60 cents and have 30 pip trading ranges in the Aussie dollar again, just like we did in 2003, 2004, 2005. It's all very doable. I know you're thinking, wow, 75 cents to 60 cents. It can happen very easily. And we'll be back to those silly trading ranges in the Aussie and the Kiwi where they did 25 to 30 pips a day. And then they become my least favorite currencies to trade, which at this point, the Aussie and the Kiwi are my favorite currencies to trade. They'll lose a lot of that as they lose much more value from here if they do. So anyway, but that's neither here nor there. So what we're talking about right now is where's some near-term targets. So naturally, my near-term target is going to be 127% extension of this move. So 74.29 would probably be a realistic target over the course of the next week or so. Uh, Maybe even today. I mean, who knows? 74. Let's just call it 74.25. Okay, that's 127% extension. Obviously we're pretty oversold. I mean, you take a look at the hourly or the 4 hour charts. I mean, we're you know pretty oversold here. Doesn't mean we can't be more oversolder. I'm just saying that it's hard chasing it down here, especially if we're not seeing any dollar strength against anything else. But you know, all right, resistance. Let's figure out where that resistance is. So as long as the Aussie stays below this blue trend line, there's no reason, not one single reason to be on the long side. So basically 76 cents. While we're below 76 cents, I don't see any reason to be on the long side. I mean, you could, I mean, maybe you buy it right here and you buy it and you catch the bottom, perhaps. And you become the bottom picker, the, lucky lottery winner bottom picker. But realistically, picking the bottoms and picking tops are really tough to do. Very, very tough to do. So, for me to be sure that the Aussie has turned the corner, it has to get back above 76 cents. Gets above 76 cents, and then I'm going to start looking at the Aussie as a double bottom. I'll start looking at the Aussie as, hey, we got a double bottom. Maybe those are some false breakouts against the euro and the Aussie or in the pound and, things like that. So, okay, let's go to the dollar index really quick, and I'm going to take some questions. Dollar, okay. Let's delete this fib. Okay. So we broke through this support briefly. Okay, fair enough. This trend line is going to come back into play, I suspect. Okay. This, by the way, was a 618. I want to say it was. Just double check that. Yeah, it was a 618. As you guys know, and I just wanted to double check it. I know I just deleted it, but let's try that again. Okay, so from here, all right, so the 50% retracement, also horizontal breakout point, will be right there. It'd be a retest of this trend line. So we should find support at 97 if we get down here, 97.40. Okay. That'd be a nice place to actually buy the dollar. That would put the euro dollar probably at 109. Okay. So if we ride a 109 in the euro dollar, like I told you before, I'd like to short the euro at 109 if we can get it. That'd probably be the dollar index down here at 97.40. If I could get that, I'd be a buyer. I'd be like shorting the euro down there, obviously. Let's see. Resistance right now for today is 98. That's pretty easy to see for today. It's just right there. That's capping prices. 98. Okay. All right. Now, I've got a lot of Europeans listening in right now. I've had a couple requests to look at the DAX. So let's go ahead and take a look at the markets really quick. This is your support and resistance bias chart. Go ahead and take a picture of it. I'll hold here for a second. I might get a drink of my coffee.